All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. Happy Friday, everyone. It is October 20th, 2023. Today is OPEX day, options expiry day. That just means we should get elevated in terms of volume, elevated volume. So we're not expecting in that OPEX tells us up or down, just that we're just going to get accelerated volume or a little more volume than we're used to. Even that is not even confirmed, but that's what OPEX is. But glad to be with you this morning. My name, again, as you know, the host of Gar Capital's YouTube channel. If you haven't already, please like and subscribe. I'm Carlos Garcia. I'm here every day with you guys. Appreciate you as always. Yesterday, what a day. We know we had that fall yesterday, really post Powell after he spoke. It's kind of like Powell has been continuing, finding a way to rug the pool and pull the rug yesterday, and kind of a tough one to really look at because we had some really nice momentum in the morning and then it just flipped midday. But again, we accelerated as we got more headlines, and it seems that as traders right now watching everything, we're kind of sidestepping what we can, just so the fact that if things blow up, we're not caught with our pants down either. But you have, again, no Speaker of the House as of yet. We have headlines in Gaza, Israel, and Palestine. We have yields tagging 5%. I checked last night. CNBC reported that 10-year Treasury yields at 5%. I looked at the bond futures. They were green. Yields are actually coming down. I don't know where they saw 5%. Who knows? But that's where we are. In that sense, we are not at 5% anymore. You can see the 10-year Treasury yield is at 4.961. And why do I say 5%? Why am I reiterating that? Again, we talked about the law of, or the round number theory, that we always have that that number, like with Apple, 170, 175 tends to be resistance or what have you, because it's a whole number. And 5% is a psychologically big number for the 10-year, since everyone watches the 10-year when it comes to bonds. And we're right there. It's very similar to the dollar yen, right around 150, where we tagged it and rejected very quickly with the BOJ. Now, I don't know if the Fed would even intervene with the bond market if it tagged 5%. I'm not sure. But it was interesting yesterday that Powell did talk about bond yields. That was interesting. I don't think he talked about that before. And he was saying that the bond yield rise is adding additional tightening to monetary policy for the Fed. So at least they acknowledge that. Does that mean that they're done? Guys, I'm going to be real with you. I've been saying this since February. I thought they were done, and they raised like 3 more times. So that one I've swung and missed. Very hard to predict the Federal Reserve. That's why they have Fed Fund futures. But we'll see. We don't have a meeting this month. After today, there is no more Fed speakers, mind you, no more. We had 8 yesterday. 8. The Avengers went out and spoke about monetary policy, anything to throw and hit your stops in terms of the market. But that's just how it goes today. We have 3 Fed speakers. Bostic spoke. We think we have Fed's Harker speaking now, and then 1 more later today. So imagine we're just kind of dodging these landmines, dodging these bullets, and seeing if we get some direction. And right now we are getting a little bit of a pullback this morning, additional weakness. But bond yields are down, the dollar's down. What gives? Is it just an OPEX deal? We'll see. Let's go around the horn rather quickly. The VIX is down 0.79%, 21.23. We broke that psychological level of 20, so it's not like we can't break above it. The dollar index 106.20, that's red this morning. NASDAQ futures down about 0.38%, Dow futures down about 85, S&P down about 12. We were flat pretty much throughout the session overnight as I was looking, but you can see now we're getting some additional weakness. The Russell 1705 down about 0.40%. 10-year Treasury yields 4.956. We're not at 5 yet. Crude oil, we were long. We actually moved the stop when we got to 89.58. And then we had our entry at 89, I believe, 05 or 89.09. So we got stopped out overnight at flat, at break even. It's just not giving us any opportunity now. It's bouncing a little bit. So, I mean, we went for, I wish we were just taking the 50 this time, but that's what happened. We never tagged 90. I think we probably did tag. We did not tag 90 last night. And that's where I was going to move the stop to lock in some points. I wrote that on the future side, but name of the game. Gasoline futures up 1.39%. That's $2.39. Gold futures are 1989, right below 2000, up 0.47%. Silver futures 23.25 down, up 0.97%. Copper's down 1% this morning. Euro dollar is green 4 pips, 105.84. 149.96, that 150 level on dollar yen, as we know. Definitely a lot of eyes there. 121.42 Flatsville for pound dollar. Bitcoin futures are up 29,710. I believe we tagged 30,000. There was some news in regards to crypto. The news that I saw, I think that would probably may have moved the Bitcoin itself, was Coinbase is confident, quote unquote, a US Bitcoin ETF will be approved after the SEC's court defeat. Again, that's the ETF that everyone's been waiting on. Again, what we're trying to do as traders is trying to see if we get inflows into a certain asset. So let's say it's a stock and we think the stock is going to go higher because it's going to attract more people. So we want to ride that wave. If more people, let's say if we get an ETF greenlit, that means more people are getting an opportunity to actually trade or own Bitcoin through a derivative, not exactly owning Bitcoin spot and dealing with all of the possible dangers of those FTXs and those Binance accounts. Coinbase I still have, I mean, no issues there. Sometimes you have issues with withdrawal or some issues with deposit. I mean, there's always kinks to any system, but as we know with Binance in the headlines and we know FTX, oh my God. So I think the ETF is kind of a nice pivot for traditional investors who are not tech savvy, maybe that don't own digital wallets, that can get a little exposure in their portfolio for Bitcoin. So obviously a Bitcoin ETF would be a boon to the asset itself. But 30,000, I mean, we break 32,000, we can make some noise, but we're just not there yet. And at the end of the day, you know, Bitcoin, relatively speaking, has been pretty choppy. We've been getting some pump and dumps relative to rumors that come out. But other than that, Bitcoin has been pretty quiet, at least lately. But if we look year to date, let me see if I can get where Bitcoin is year to date, comparison to the S&P and the Dow. Let's see if I can expand this. Let's see if I can add Bitcoin. Crypto. There we go. Bitcoin, at least in a year to date. Here we go. Let me get this for you guys. Sorry. Okay, so here it is. This is the year to date chart. Really, since the 1st of January, it says December 30th. Bitcoin is running away with returns. It's up 78%, and the most quietest 78% gain you will know. No one is talking about Bitcoin. No one's talking about crypto because you're just not getting that kind of attraction of capital. Yesterday, I went ahead and posted something rather interesting that stood out to me, the piece of news. And here it is. Let's see. It's regarding flows. Here we go. Money market funds see largest outflows in 15 years. Now, we talked about how much money market accounts have a ton of assets on the sheet or in their fund. About $5.7 trillion worth of capital sitting in money markets. Completely different from 2007 in terms of liquidity. But those assets fell about 98 billion to now 5.61 trillion. Where is this 98 billion going to go? I want to see if that's going to be into equity funds, if that's going to be into bond funds, or is it just going to be, you know, for whatever reason, everyone decided to pay their bills or decided to buy more real estate. Again, that'd be important to know. So I'll take a look at the B of A flows in terms of funds as it comes in. I'm always looking for the latest headlines so I can report to you guys. But again, Bitcoin, the silent killer right now, up about 78%. But the way we've been talking about Bitcoin, it's been pretty much nothing going on because we're so trained mentally that Bitcoin should be up 300, 400% every year, and it should be up 10% every day. The Wild West of 2017, as we know. But NASDAQ still up 35% for the year. S&P up 11% year to date. IWM down 2.21% year to date. And the Dow is flat. So we can see that what is really tugging this market is the Magnificent Eight, which is the big mega cap names that are, in everyone's mind, pretty much safe in their minds because of their balance sheets and their growth and all that stuff. The NASDAQ, again, still being rather elevated. The S&P being a big part of that. No help from Tesla being down 10% yesterday. But the reason I say this is because we want to go ahead and take a look of, okay, we know in October we were going to get that flush. We talked about that in terms of seasonality, right, guys? So this is nothing new. The question is, can we get through October above here, 42.57? That's the 200-day. That's really all we're looking for. Again, with OPEX today, I also saw that put call ratios were rather elevated. That was at 92.25. If we bring that up together, let's take a look at it. Put call ratios, CSP. And here's on a daily chart. You could see the green shoots. Usually when you have the green shoots, that's when you start seeing possible opportunities for a long, and if you get red shoots, possibility of a short. So let's go ahead and add the S&P 500. So I'm going to go ahead and compare it to the SPX. This is the S&P 500 on the purple line. And you could see when we had spiked of put call ratios that usually indicated a short-term bottom. So we could see here, that's the red shoot in terms of puts getting more elevated than calls. I remember we talked about this very specifically on the morning notes, and you can see that's where we bought around 38.50 back in March of this year. So you could see this green shoot. This is back from December 27th of last year. That's where we were around 3,800, and that bottomed, and then we continued to trek higher to 41.50. So we're nowhere near that big green shoot, but let's go ahead and give it some context. So the last time that we had put call ratios this elevated was on the 4th of October, and the level of the S&P then was what? 42.40, let's just say. Just 10 days after that, we got to near 43.80. So about a bump of around 200 points, and you can see how depressed put call ratios got. Everyone went loaded the boat to calls again, and what happens? We got a nice little dip, bounce, but again, another green shoot. The 16th of October, where were we? We were at 40. This is a shoot to the bottom. Let's see here. This is it here. 43, let's say 43.75 or so. And that's the green shoot. 43.75 S&P does not line up exactly with this candle. You could see this is the candle lines up, kind of a shooting star here, but relatively quiet in terms of put calls, but we continue to fall. So now that we got this spike here, right here, we are at 42.80 or so, we'll call it. Now we'll see if the market does continue this similar pattern of just a little bit of a bounce. But you can even see the S&P downward trend and an upward trend in terms of put call ratio. So we're starting getting some put love. Everyone that wants to buy puts here, could it be buying puts at the bottom? That's something we're going to see today. We do have OPEX, as we know. Again, just means elevated volume. Does not mean one way up or down. I expected that we were going to get a bounce at the bottom in terms of the week is in. Powell changed, obviously, the perspective on that, or changed the market on that way. Let's see if I can get this. This chart, I swear, just pisses me off. Sorry, guys. Let's see if I can get this going. I kind of messed with my S&P chart, and I have to kind of expand it now. What a pain. All right, 42.91, starting to get a little bit of a bounce. Nothing, no big deal. Let's go and take a look at NQ. I know you guys got some questions. You guys are ready for me this morning. How awesome. Let's go to the daily. Again, remember yesterday, Tesla was red 10%. Semiconductors were green. Amazon, Microsoft, all green. Apple was green yesterday, yet the NASDAQ was down over 1%. So the mega caps are holding up relatively strong. Just got to stay above the 200-day by the end of October. And again, we know what we're looking for. We're looking for that end of the year rally based on seasonality. And even November, another piece of info here. I know so many things. Yesterday was absolutely nuts just trying to send out all the headlines from Powell. November, I know I sent it here. Let's see, November, did I have anything in November? More chop, here you go. The third year of a new president tends to see strength in the first half of the year. Then we chop into Thanksgiving, both are check, then a strong rally into the election year. So here we go. Here's what the expectation is based on seasonality. As we know, this is from 1950 to current. This is pre-election year, very similar to that one that we had that says equity clock. And you can see that we're getting this dip here, but very choppy range really since the end of July. But we still have, at least historically speaking, more upside in November, and then we're supposed to get a little bit of a dip into the end of November. But December, Santa rally, that's what it's showing. We will see. But doesn't look great right now, I'll tell you that much. But look at this support level here, right around 14.8. My big support level was 15. But when Powell was speaking, then we had headlines. Should have shorted. Obviously, we're above the 200-day. Let's see if we clear below 14.8 today. And if we do, maybe we'll get a crack at maybe targeting 14.7 for a quick 100 if we start melting down. The problem is we don't know if this is too long in the tooth. Are we oversold? Let's go ahead and take a look on the daily. All right, let's go ahead and check this study. And then I promise I'm going to get to your questions. So many things to talk about today. All right, here's your RSI for the daily. We are not oversold yet. 39.61 is the reading on the daily. And you can see the lowest point that we had was right here at the 200-day. That was a 30 reading on the RSI. Let's go to SPX spot and see. Very similar. We're in the low end of the range in terms of RSI. But could that 200-day right at 42.26 SPX get us right to 29? Would that be the other pivot that we're looking for? We're still holding on to this trend line. We're still we did deviate a little bit, obviously, earlier in October. Do we keep knocking on the door? Do we break down? And if we do, what's next? It's 41.55 on SPX spot. Why would that be what we're looking for? Let's go to the weekly. We are pretty much in the same zone that we had back in August of 2022. That's the same level we were when we got that bounce and that rejection when we tacked the October lows of last year. So many moving parts. Let's go and take a look at NASDAQ rather quickly. Not enough time, I'm sorry, but I look at this way. Does this not look like a cup and handle? It does. And this is on the weekly, 52 RSI, so we're nowhere near oversold on NASDAQ. In terms of the daily, we're at 42. Again, could be that big cup and handle. Zooming in a little bit, again, that 14.8 level. We're nowhere near the 200-day, at least that, because of NASDAQ being up so high this year. So again, it's going to be something that we're going to be watching very closely. If again, looking at the larger time frame on the weekly, yeah, it does kind of look like a head and shoulders. I mean, a cup and handle. Again, but we got to see exactly how we play out. I am so sorry for not answering your questions. Good morning, everybody. Accelerated volume is what we need. Good morning, Clifton. Good morning, Jay. Tesla and IWM thoughts. Let's do it. They just reported that the Plaid is going to be raised in cost. The Model 3 Plaid, a Model S Plaid, I'm not sure. Well, back to Tesla. We are now near the 200-day, right at 213.64. We filled this downside gap yesterday, thankfully, and we'll see if we hold that, very similar to the S&P. But now we have a gap to fill to the upside. As you can see, look at the RSI, guys, right at 30 on the daily. So maybe Tesla gives us some kind of relief bounce, usually does, especially after a big move. Could we get additional weakness? Absolutely, but I'm leaning towards getting into calls above 230 so I can play this gap fill at 242 and see if that 200-day holds. That's really what we're looking for on Tesla. And if this breaks, then we definitely got more downside. We can start playing the 200 puts. We can play the 190 puts. But again, that 200-day is something I'm looking for. Let's take a look at small caps IWM. And again, back below the recent lows. We're below that trend line. Big level of support would be last year's October levels, which is right around 165.65. We're nearing oversold, but we're not yet. So one more slam, possibly on small caps. We had a nice broadening out of market breadth lately. But again, the last couple of days have been rather rough for equities as rates have gotten higher. Morning, Carlos. Carlos Garcap. Thoughts on Tesla for today's session? Yeah, I just went over that. It is oversold. It is at the 30 RSI currently. So I'm going to be watching that closely. But the headlines could be crazy. I don't know if we're going to get a speaker vote today. I don't know what's going to happen in the Middle East if anything changes. So it's going to be a tough one. I still have Amazon and Microsoft. It's killer because that thing rose first thing yesterday. We'll see if we get a pop today and maybe see if we get a short squeeze. Everyone seems like they're short. Very similar to that price action that we had on non-farm payroll reports where everyone thought we were going to tank and then we absolutely soared. I'm going to go over that on our video later on this weekend. We'll go over exactly what we did right, what we did wrong, and always learn from them together. So let me go ahead and remove this study. Sorry about that. I know we're running a little late today. I only want to trade banks. What to look for when trading that sector? Well, if you're looking at the XLF, keep in mind that's the ETF for banks. That is weighted. So again, you have to pick a couple of banks that you want to trade. Depends. Are you talking about investment banks, retail banks, American banks, international banks? Just really depends on what you're looking for. If you're saying JPM, again, focus on a JPM, Citibank, Morgan Stanley, those names. Goldman Sachs, they usually have volume if you're trading options. If you're just trading the stock itself, the real thing you're looking for in terms of banks, excuse me, is really just the technicals. And that's really all you can go by since we already had earnings for them. So there's not going to be anything different that they're going to announce to us. And keep an eye on interest rates, of course, but rising yields does help banks. Remember, they borrow at the 2 or the Fed fund window, but they borrow at the 2 and they lend at the 10 usually, which is mortgages, MBS, whole lot of working parts. But raising rates is actually a good thing for banks. The problem is that it hurts in mortgage origination. We don't have a lot of IPOs out, just not a lot of action for these bankers. So those EPS levels are going to come down. If you notice, we're kind of in a seasonally changed period where in 2020, 2021, asset managers, real estate, mortgage brokers, investment bankers, retail bankers, again, very good time for them. Anything that was very considered asset centric. But as you have interest rates come up, speculation is meant to be tightened. And then, of course, those revenues for those banks are going to continue to slide, at least in the short term, until we have some rate relief. And really, the rate relief is competition, because it's really hard if you are an investment banker to sell to a client, pitch them a stock or pitch them information, pitch them a fund, when you can get 5% or 4.5% on a savings account online just to wait. So again, I think where we are is in a place where most people are just waiting. Or they're waiting for their demise, or they're waiting for it to bottom. And that's really, I think, where everyone's right now. Everyone's on the sideline waiting to see how this plays out. How many people got out of equities? How many people raised cash, preparing for things? And the thing is that when there's a crash and you're too prepared and everyone's prepared, the crash doesn't permeate as strongly as getting caught not prepared in that sense. Next level to buy Palantir as we get into the 3-minute warning. My bad, guys. 1844, I'm waiting for a break to target 20. If you're talking about buying the stock itself, it's done some wonderful things this year. Obviously, in terms of price action. There is a level of support at 1461. That'll get you about a $3 savings on the Palantir stock itself. Again, that's the same resistance that we had last April. This is the breakout level that we had in June. So a retest of that around that zone, that'd probably be the level that you're looking for. Sorry, guys, there were so many things to go over. So little time, as we know, but don't fret. This weekend, I will go over it all. I will not have the 3-minute warning on the top of there because it is recorded. So again, you get to watch that at your own leisure on YouTube. I know there's so much things to go for. If there's anything that you guys want me to discuss in particular on the recap and preview video for this week, make sure to type it in the comments so I can go ahead and add that as a subject for this weekend's video. Again, appreciate you guys as always. I hope everyone has a great Friday. Let's see what we get today. Markets can be a little wild. This is the tough part, kind of dealing with it every day. The mental fortitude you must have and the stress you must, kind of hold on to sometimes. That's just part of the game, and we just got to live with it. If it was easy, everyone would do it. That's the deal. Appreciate you guys as always. Thanks again. Thank you, Carlos. Take a look at HBAR. Looks like a good risk reward crypto off topic. write that on the on the comments, man. We'll talk about whatever you guys want in terms of the market recap this weekend, and I'd be happy to answer your questions, guys. As always, this is for you. If there's anything you want to talk about, let's talk about it together. Have a great rest of your morning. I will see you guys on the Discord server. Cheers.